Welcome to The Explainer. We hear about ESG all the time, but how do investors actually use it? Well, today we're going to crack open the investor's playbook and get a look at the global rulebook that's really changing the game in finance.
Right. So you hear the term ESG thrown around everywhere. But what does that actually mean for an investment manager on, say, a Tuesday morning? When they decide to really lean into environmental, social, and governance factors, what's in their playbook? Let's open it up and find out.
So, how do these big, world-changing ideas get turned into actual financial decisions? It's not just wishful thinking, that's for sure. They've got a pretty powerful three-part toolkit. This is really where the principles become a process.
Okay, so it pretty much boils down to three key actions. First, what they decide to invest in. Second, how they interact with the companies they own. And third, how they try to shape the entire market. Let's break them down one by one.
This is the absolute bedrock of it all. And let's be super clear, this isn't about charity. It's about being a smarter investor. They're now digging into stuff like a company's carbon footprint or its employee satisfaction to spot risks and opportunities that a traditional financial statement would just completely miss.
You know, the days of just buying a stock and hoping for the best, those are long gone. Investors are now active owners. They're using their influence, whether that's a quiet chat with a CEO or a very loud vote at a shareholder meeting, to push companies to think more about long-term sustainable value.
And finally, they zoom out. They look at the big picture. Because they know that huge challenges, think climate change, can't be fixed just one company at a time. So they're talking with governments and regulators, pushing to build a financial system that's just more resilient and sustainable for everyone.
Okay, but this all raises a huge question, right? With all this going on, is it just the Wild West? Is everyone just kind of making it up as they go? Or is there a consistent set of guidelines here?
No, it's definitely not the Wild West. In fact, what we're actually seeing is this massive, coordinated global push to write a common rulebook for ESG. We're watching it go from a niche idea to a core part of finance. So let's meet the architects who are building these new standards.
So you've got the real heavyweights, like the United Nations, setting the big vision. Then you have specialized groups like the TCFD, which is laser-focused on climate risk. You've also got major economic blocs like the EU creating really detailed regulations, and professional bodies like the CFA Institute pushing for total transparency.
And you know, what's really interesting here is that these different groups aren't really competing with each other. It's more like they're collaborators. Each one is adding a different but crucial piece to this giant global ESG puzzle, which helps create a clearer picture for all of us. You really can't talk about any of this without starting with the United Nations. They've been the cornerstone of this movement for decades. By creating things like the Principles for Responsible Investment, they really laid the foundation for this whole global shift in how we think about money and its impact. Then things start to get a lot more focused. Take the TCFD. That's a task force set up by the world's biggest economies. What they did was give everyone a common language just for talking about climate risk. By asking companies to report on these 4 key areas you see here, it suddenly became way easier for investors to compare apples to apples on climate performance. So following that, the CFA Institute took the next logical step. They said, okay, that's great for companies, but what about the investment products themselves? Their whole goal is simple: to make sure that when a fund slaps an ESG label on itself, you, the investor, have a clear, honest, and standard way to know exactly what that means. And then there's the European Union, which has gone, even further with its super ambitious taxonomy. Think of it like a giant, detailed dictionary that officially defines what can and can't be called environmentally sustainable. This is a huge move to fight against greenwashing. When companies try to look a lot greener than they actually are. Okay, so we've seen what investors are doing on the ground, and we've looked at the global rules they're starting to follow. Let's pull it all together and see how these two parts of the ESG story really connect. So here's the big picture. On one side, you've got investors taking real, concrete actions. And on the other, you've got this amazing global ecosystem providing the roadmap and the rules. These two forces are working together. And what they're doing is weaving ESG right into the DNA of the modern financial system. And that leaves us with one last kind of big question to chew on. There's no doubt we're moving towards a single common language here. But as that global rulebook gets thicker and thicker, what does that mean for all the different creative ways to do ESG? Is there a risk we might lose some of that diversity?
It's a fascinating space to watch, for sure.